and Hispanic is at 8.5%. So, the impact is disproportionate. And we as a company are doing an extraordinary amount, both internally and externally, to figure out how we can have a direct impact, but we can also work with others. One of the things that we did was we took all of the money that we were entitled to earn from the government last year through PPP, which for us was over $400 million, and said, we want to put that back to those that actually can help those that are most in need. So $250 million of that is going to help CDFIs that can really help the underserved communities. Another $100 million is going to small businesses, and then $50 million for technical assistance. We ourselves have committed to doubling the leadership ranks of the Black community within Wells Fargo within the next 5 years. We have operating committee representation today, which we didn't have when I took this role. We have a new role, diversity, equity, inclusion, including responsible for driving a more effective business proposition for diverse segments in all of our business. That reports directly to me. So we're doing a tremendous amount, and we're going to continue to look for ways that we can do things that are really, really impactful. It's not about headlines. It's about doing things that are going to actually make a meaningful difference, both within company and in our communities.
But not an audit.
We're doing our own work to make sure that we understand everything in terms of what all the facts are, and we're going to continue to disclose more. And so, I'm confident that the work we're doing is going to achieve the goals that we all have set for ourselves.
We're seeing the economy we believe, to take off here because there's been a lot of monetary and fiscal stimulus for it. It's benefiting the banks, including your bank, right across the board. At the same time, when you came to Wells Fargo last fall, you had a little bit of one hand tied behind your back with asset cap from the Fed. When do you think you might be able to get rid of that?
Yeah, David, listen, everyone asks me that question, and I wish I could be more specific. What I can tell you is that we know the work that we've got to do to get the asset cap lifted. We're doing it, and I'm confident that we will get the work done. In the meantime, we have an amazing franchise. We come into work every day, and we serve our customers extraordinarily well, and it's the dedication of of all my partners and teammates around the country that do it. And so, we're going to continue to work through everything that we need to work through. And then when we can grow the asset base of the company, we will do it.
We're seeing some pretty remarkable projections on GDP growth in 2021 and even into 2022. What are you looking at in terms of overall growth, and how could that specifically translate into business for Wells Fargo? How does it help Wells Fargo particularly?
Sure. Well, listen, we are predominantly a U.S. bank, and we live and breathe by the success of U.S. consumers, small businesses, and middle market companies, and larger companies as well. So, to the extent that they're doing well, we do well, and when they're not doing well, we won't do so well. So, what we see today is clearly remarkable progress with the vaccine, with the rollout of the vaccines. But consumer demand is extremely high. Over the last couple of weeks, we, like others, have seen material increases in consumer spend, and that's before the stimulus checks have arrived, which are the deposits are just arriving today. So you put all those things together, plus ongoing support of the Fed, and we're really bullish in terms of what the fourth quarters could look like. And we can see GDP growth of 6.5% for sure. Ultimately, that's good for the entire country, as long as the recovery is even and all benefit, not some industries and not some segments of the population.
And that was exactly what I was going to ask you about, the evenness, because Wells Fargo is a full-service bank. You deal with small and medium-sized companies, not just the big ones. The big ones, a lot of them have done pretty well. Are you seeing a pickup in the small and the medium?
I would say what we're starting to see is we were seeing loan utilization declining and not a lot of demand for loans. That appears like it could be bottoming, which does say something about the willingness of those companies to invest in the way they're thinking about the future. It's all very real time, but as I said, when you look at all of the things that line up to what could be a very strong second half of the year, that's certainly the way those businesses will be thinking about it, I think.
Okay, Charlie, I really appreciate you spending time with us today. It's really good of you to take the time. That is Wells Fargo CEO Charlie Scharf. And now we want to get some reaction with Bloomberg's special correspondent for banks, and she is Shonali Basak. So, Shonali, thanks for being with us. Tell us what you took away from what Charlie had to tell us.
Yeah, David, really interesting interview. On one thing, his branch strategy. The idea that 90% are open is a big deal for a firm like Wells Fargo, where so many of their employees across the country are in those branches. Another interesting statistic about those branches, David, is that Wells Fargo was one of the biggest net closures of branches in 2020, according to S&P analysis. So anything around his strategy around those branches is really interesting.
It's interesting. He said he's not going to force people to come back. It was interesting. It seemed to have a fairly gentle touch there, right?
Yeah, and that gentle touch, you know, the investment banks want people back right away, but at the end of the day, it's a talent retention issue, right? When you have those buy-side firms that are saying you can take your time, it really behooves some of these banks that are trying to attract talent to say that we're slow-walking something like this.
Talk about the asset cap, because he said everybody always asks him. I asked him as well. He said, we know what we have to do. We'll do it in due time. Do we have any sense ourselves of what sort of time horizon there is for that?
Yes, so the great news is, and this is from Bloomberg's Hannah Levitt, had broken a little earlier this year, that discussions with the Fed are moving in the right direction. It could be later this year, it could be into next year. It will still take some time, but that idea that this cap is going to lift, David, that has really been a real driver for Wells Fargo's stock this year, the idea that they could lend again into a booming economy. Remember, Wells Fargo, if you look at price to book, it's really trading at par now, which is a big deal for Charlie Scharf. And, you know, that's better than Citigroup.
So, Shonali, give us your sense, because you know these banks so well. If you're Charlie Scharf, what are the parts of your bank you think you can really grow, as opposed to the ones that you don't grow as much or maybe even move away from?
Well, into a booming economy, you want to keep those core businesses, consumer, small business, mortgages going strong. But then Charlie Scharf has another opportunity here, David, and that's investment banking. It's something he knows well, given his time at JP Morgan, and it's something that with the asset cap lifting, he has the opportunity to gain some share with Wells Fargo's balance sheet.
Gain some share, but does he have any comparative advantage? There are some other people, as I understand, who are in that business already, and I'm sure they're not just going to cede market share voluntarily.
That's for sure. It won't be easy for them by any means. But with that said, they have the chance to do it. What we saw from the pandemic is the banks that were able to lead with their balance sheets. Goldman Sachs, Citigroup, Bank of America was one of the top underwriters last year, and Bank of America's investment bank is not, known to be as big as Morgan Stanley's or JP Morgan or Goldman Sachs. But they were able to make it up there. And again, once Wells Fargo is able to do that with their own balance sheet, it can bring them back up on those league tables.
Shonali, let's be honest. Wells Fargo has had a rather rough go of it before Charlie Scharf came in. In fact, that's part of the reason they brought him in. Do we have any sense of whether they are getting past or have gotten past the reputational damage that they suffered?
It's a great question, because we've heard some major, even actors, really. John Legend last year at a Bloomberg event came down on Wells Fargo for the years of mistreating consumers. But they are looking to turn the page. They have new management on their side to do so. What you asked him about diversity is really important, because as a big consumer bank, to not serve so much of the country is a big deal. So we're going to want to see their efforts really increase there. Their head of home lending, Christy Furcho, who was profiled in one of our stories yesterday as one of the top black bankers on Wall Street, she called Charlie Scharf himself to get this job, and it's something that she is focused on in home lending over at Wells Fargo.
Thank you so much to Shonali Basak for reporting on Wells Fargo. And this is Bloomberg.
This is Balance of Power on Bloomberg Television and Radio. I'm Guy Johnson. Stocks finishing up the day here in European trade. We've got the auction process to get through, but nevertheless, let me show you some numbers, give you an idea of what is going on as we wrap up the day. We're waiting for the Fed. It's an hour and a half to go, basically. Everything really quite quiet towards the end of the session as we wait and see exactly what the FOMC delivers. 242, the number on the stock 600, down by around 0.4%. Let me just talk to you about the sector story, because I feel like I'm repeating myself a little bit as to what we learned yesterday. The GRR really clearly telling us that we are in a position where autos are outperforming and the commodities are underperforming. Here you go. Let me show you. Autos up by over 3% today. We've got stocks like Volkswagen and BMW absolutely roaring at the moment. A huge re-rating of that sector going on. The banks actually had a relatively good day today. It's going to be interesting post-Fed to see whether the bank story globally continues. Be interesting to see what happens with the yield curve at that point. Bottom end of the market, yields are up today, so you are seeing the dividend payers coming under a little bit of pressure. So utilities, real estate, healthcare, at the bottom end of the market, but basic resources are down there as well. The miners are under pressure. A little bit of a move out of the commodity story over the last couple of days, and that continues today, down by around 2%. But the real standout story, once again, the auto sector, the car sector, dominated, of course, by Germany. So let's take a look at what the story is as we break down the individual markets. FTSE, DAX, CAC here in Europe. The DAX having another solid day. In fact, the German market up by 0.3% today, outperforming both the CAC 40 over in Paris and the FTSE 100 in London, which actually, if you look at it, had a relatively good day as well. There's some really interesting stories within the FTSE 100, which I've not got individual stocks